Yes, and pray. Lord Jesus, we thank you this morning for another opportunity to contribute to Ghana's social.
Good morning, distinguished guests, ladies and gentlemen, members of the press. My name is Nanama Santipoku, and on behalf of Professor Peter Kwote, the director of ISSER, Professor Isaac Osakoto, the head of Economics Division at ISSER, and the Planning Committee, it is my greatest pleasure to welcome you to this development dialogue, Ghana's Public Debt Management, Causes, Impact, and the Way Forward. The conversation today is in line with ISSER's fundamental belief that it is important to create a forum for discourse that deepens knowledge and awareness on global and national issues. Over the past 1 year and a half, or maybe just about a year, the word debt has captured our nation's attention. The nation's high public debt poses a significant obstacle to our social economic progress. And this has prompted numerous discussions in both public and private spaces. Weathering this crisis and continuing along the path of sustainable debt financing may require bold, new, and innovative ways of doing things. Thus, over the next 2 hours, we will hear from various practitioners and specialists regarding the public debt, with the aim that by the time this event is over, we will all have gained knowledge that resolving the debt issue that the country is currently experiencing is not insurmountable. Thank you very much. To have a bit of an idea of what we think about the debt, please take a look at your program. At the bottom of your program, there are 2 QR codes. Kindly indulge us and scan the one on the bottom left-hand side. There's a question we would like all of you to answer. The one on the bottom left-hand side of your program. In just about a minute, we should be seeing some of the answers that we have given to the question that was posed. Please, let's all try to answer so that we have a fair reflection of what those of us gathered here think the issue is. Please, has everyone been able to access the question? Okay, so I think for those of us in the room, this is what the majority think. And I think from the panelists and the discussions that will follow, we will get more insights and we'll be able to understand our issues much better. Maybe by the end, your answer might have changed. Your answer to this question might have changed. To get us going, I would like to introduce our moderator who will take over and lead us for the rest of the event. Our moderator is currently a senior lecturer at the Department of Economics here at the University of Ghana. She's also affiliated with the Center for Research in Economic Development and International Trade. She's also affiliated with the School of Economics at the University of Nottingham, the African Economic Research Consortium, and the Youth Bridge Foundation. Her research focus is on education and labor markets, gender and inequality, international trade and development. She has consulted and worked on various projects with international organizations, including the ILO, IDRC, and the Brookings Institution. She has been a consistent advocate for diversification and inclusive growth policies in Africa and is a familiar voice commenting on national issues. Please join me in welcoming Dr. Priscilla Chumesi Bafo. Thank you.
Good morning, and thank you very much, Nanama, for the kind introduction. Distinguished guests, ladies and gentlemen, good morning and welcome to this morning's ISSER Development Dialogue. It is a pleasure to see you as we seek to discuss a number of probing issues concerning the economy of Ghana. I take this opportunity to welcome you once again, and particularly to those of you that are joining us online. We say thank you for joining. So Nanama has already gone ahead with the QR code. As we go on, we would also later ask you to scan and respond with a word on your impression of the discussions that would have gone on. But to go straight to the point, historically we know that Ghana has persistently run budget deficits, and these deficits are financed by borrowing through domestic or external sources. Recent economic difficulties are as a result of mounting debts that led the country into a debt distress situation, for which reason the debt became unsustainable and Ghana had to restructure its debts in order to secure the current 17th IMF program. On December 19, 2022, the country placed a moratorium on the servicing of its external debts and also went ahead to restructure domestic debts. The country has recently hinted of the need to restructure external debts. All these that are happening are quite new on the economic landscape of Ghana because essentially the country has struggled with managing debts, but most of it had been through debt forgiveness by multilateral agencies or bilateral agencies. This time round, it is with private investors that the country is dealing with, and these come with a lot of untold ramifications on the economy as a whole. So this morning, we have a number of questions, and to help us understand the issues, a rollout, we have assembled a number of very qualified experts who would help us answer a number of questions. The questions include, what are the issues with the management of public debt in Ghana? Why have we historically not been able to manage it well? What are the facts, the impacts, and more importantly, what should we learn? What takeaways we should take so that we do not get onto this trajectory again? And to help us answer these burgeoning questions, our team of experts would now call them by reading a brief profile of them and ask them to join us on stage. I understand that a couple of them are also joining us via Zoom. We'll introduce them and let you know. But in no particular order, I would introduce Professor Augustine Kwesi-Fosu. Professor Kwesi-Fosu is a professor at ISSER. He also holds several other honorary appointments and has served as an expert in numerous international capacities. Among his editorial appointments are Editor-in-Chief of the Journal of African Trade and co-editor of the Journal of African Economists at the University of Oxford. Ladies and gentlemen, please help me welcome Professor Kwesi-Fosu onto the stage. Thank you, Prof. Our next panelist is Professor Peter Korte. Professor Peter Korte is a director of ISSER and a former head of Department of Economics and director of Economic Management Program, University of Ghana. He was re-elected recently to the 9-member board of directors of Agricultural Development Bank, ADB, for a second term. His research interests include financial and monetary sector, private sector development, including SMEs, development finance, migration, remittances, and poverty analysis. Ladies and gentlemen, please help me welcome Professor Peter Korte onto the stage. Our next panelist, who is also present physically, is Madame Rebecca Teiko Saba. Madame Rebecca Saba is a lawyer and a member of the Ghana Bar Association. She's been a member since 2016. She is also a certified project management professional, a multidisciplinary development practitioner with over 20 years experience in development. She is currently the National Director of Development and Social Services with the Presbyterian Church of Ghana. Her previous roles include serving as Deputy Programs Director and Head of Programs of Star Ghana Foundation, the first Ghanaian country manager of the British NGO Christian Aid, and as Chief Operating Officer of the Institute of Democratic Governance. And I also hear she is a proud alumnus of ISSER. Please help me welcome Madame Rebecca Saba. Our next panelist, who is joining us via Zoom, is Dr. Sam Mensah. Dr. Sam Mensah is a financial economist and investment banking consultant and the founder of SEM Capital Advisors, an investment management and advisory firm from 2006 to 2017. He served as a policy advisor to 3 successive ministers of finance and led several key government financial transactions such as Eurobond issues and privatization. Dr. Mensah has been at the forefront of financial sector development and has led key initiatives such as Financial Sector Strategy Plan, Bond Market Development, the Ghana Infrastructure Investment Fund, Ghana Exim Bank, and the Venture Capital Trust Fund. Prior to his consulting career, he was an assistant professor of finance at the University of Michigan. Please, if Dr. Sam Mensah is with us, you probably can show his. Please, you are welcome, sir. Ladies and gentlemen, let us appreciate him. Our final panelist is Dr. Theo Echampong. And if you follow the development discourse on Ghana, he is a man that needs not much introduction. Dr. Theo Echampong is an economist and a political risk analyst with over 14 years of experience in natural resource governance and public financial management. He has worked as an independent consultant on various global energy industry, public economics, and market research projects covering frontier emerging markets. His areas of specialization include taxation and investment analysis, including extractives, fiscal regime design, and financial modeling, energy policy, and international trade. He is an associate lecturer at the Center for Energy, Petroleum, and Mineral Law and Policy, University of Dundee, United Kingdom. He is also an associate lecturer and honorary research fellow at the Aberdeen Center for Research in Energy and Economics and Finance at the University of Aberdeen. Please let us welcome Dr. Theophilus Echampong. So, ladies and gentlemen, without further ado, I will call onto the podium Professor Augustine Fosu to give us his presentation. The format of the program today is that our panelists will take 15 minutes each to give us a presentation on their perspective on the issue that we are discussing, and we'll follow up with a number of questions. So Professor Fosu will start by taking us through understanding the factors and causes of our historical debt crisis. Please let us welcome Professor Fosu.
Thank you very much, Madam Chair. All protocols observed implicitly. Ladies and gentlemen, it is my pleasure to be able to take the lead, and I'll try to set up the background for the presentations. Obviously, if you're talking about debt, it must be because debt is important, right? But why is it important? And that's the kind of thing that we want to start out with. I will then give you some type of stylized facts about the behavior of debt over time and deficit before we get into any real explanation. All right. Now, this is back in the early 1990s. And I remember that time I was in the US, and I was wondering why debt was important after all. I'd read a number of papers on Latin America indicating that debt would influence growth through investment, etc. But then I said, no, probably debt has a direct effect through productivity of investment. And I came up with what they call the direct effect of debt hypothesis a long time ago, in the 1990s. And indeed, I found that debt can enhance growth if it's small enough. But if it's large enough, then it may hinder growth. So debt need not be bad, after all. Now, subsequently, in the 2000s, I was interested in finding out how debt affects the allocation of fiscal expenditures. And I found that, indeed, there's a tendency for debt burden to shift fiscal allocation from the social sector with adverse implications for social welfare. Okay? So, yes, debt is important. Well, historical evidence on debt, well, we find in the 1990s, that is around the time of democratic rule, debt indeed increased. That's to be expected. And if you look at this very carefully, you find that indeed around the time of elections, what they call the Toro cycle, there's a tendency for debt to increase. And you can go through and observe that. And since 2005, debt has increased quite a bit. But between 2000 and 2005, I remember the time I was in Ghana, and they were saying, Ghana is going HIPIC. A lot of people were crying, Ghana is going HIPIC. HIPC. But guess what? HIPC helped reduce the debt from 2000, early 2000. And then they also have the so-called MDRI, Multilateral Debt Relief Initiative, in 2005. So it's quite clear that there's a reduction in debt, significant reduction in debt from 2000 to 2005. And then after that, what happened? Debt increased quite a bit all over the place. Now, if you look at external debt, which is what used to be the case for Ghana and many African countries, look at what happens. 1970, debt increased, but a lot more in the 1980s, and that was a time that you were having both economic and political reforms in the country. There's no free lunch, right? Those have to be financed. We find the increase in debt, and once again, you observe that there's a reduction in debt from 2000 onward, and thereafter, we begin to increase debt again. We can compare the two in terms of total debt and external debt. We find that the difference between the two is actually domestic debt. Look at this happen. From 2005 and so on, we've been relying more and more on domestic debt. Even though net external debt has also been increasing, it's a different structure right now. As the moderator indicated, it is more due to private sector, Eurobonds and so on, as opposed to concessional debt earlier. I think when we talk about that, I think it's important to make some comparisons, to provide kinds of evidence. Kind of recently, or currently, for example, 2011 to 2018, yes, Ghana held a higher debt compared to Sub-Saharan Africa, on average, about 12 percentage point difference. 2019, 12.7%, about 13.20 difference. 2020, it goes 15 percentage points. And look at 2021, 23 percentage points. Huge. Well, 2022, 2023, 32%, 43%, even more huge. It's gargantuan difference, as Ghanaians love to say. But understanding debt, I think it's also important to understand fiscal deficit. Because it is a fiscal deficit that leads us to borrow so we can finance the deficit. So here, I provide that. And we find that fiscal deficit, if you look at it very closely, tend to increase at the time of elections, 1996, 1992, 96, 2000, and so on. And you see this big dip. And that is 2020. All of us know what happened in 2020. The bottom fell out. COVID-19 was the case. But I would like to propose to you that it wasn't just COVID-19. There's something else going on. And that's what I call the perfect storm. Now, when you have a crisis like that, you can afford to maybe hide. I'm not saying they hid anything. I'm just saying you can afford to do that. All right? Okay? So now let's look at expenditure and revenue. The red is expenditure. The blue is revenue. Now, if we look at revenue, revenue has actually been increasing. Despite what people talk and they indicate that revenue is a problem, not necessarily. It has been increasing steadiless proportion of GDP, but gyrations in expenditure, the red graph, that tends to define the deficit pretty much. And once again, we find 2020, we have a huge difference between the two, of about 16 percentage points. Huge, 16 percentage points. This is much higher than previously, where we had 8 percentage points, 9 percentage points, and so on. Again, we can make the comparison with Sub-Saharan Africa Ghana is in blue, Sub-Saharan Africa is in red. Yes, it is quite clear that deficits have been higher in Ghana than in Sub-Saharan Africa, historically speaking. No doubt about that. But again, in 2020, crisis hit everywhere, not just Ghana. It hit Algiers, it hit Cote d'Ivoire, it hit many African countries. But look at the difference between Ghana and the rest of Sub-Saharan Africa. Huge gap now between the two. So there must have been something going on in Ghana that wasn't going on elsewhere in the subcontinent. What is it? Well, let's look at the expenditure and the revenue. Again, Ghana is in blue, Sub-Saharan Africa is in red, and we observe that indeed expenditure, believe it or not, has been lower than the Sub-Saharan average. But now, all of a sudden, in 2020, it jumps up. Huge. Of course, we're also going to observe the increase in expenditure around the electoral election period and so on. But the jump in 2020 is quite remarkable. Well, how about revenue? Once again, we see that revenue has been increasing steadily. Ghana has been below Sub-Saharan Africa. So historically, it's fair to say that the deficit was as a result, in comparative basis, as a result of lower revenue in Ghana compared to the rest of Africa. And you can see the gap between the two revenues being higher than the gap between expenditures of the two, Ghana versus the rest of Sub-Saharan Africa. But, and this is what I wish to emphasize, more recently, Ghana was catching up on revenue. So it's no longer the case that currently revenue is really the problem on a comparative basis. So the problem more recently is what? Expenditure, not revenue. All right. Well, we've observed that debt was important in terms of having the economic and political reforms of the 1980s and the early 1990s, and that there was a significant reduction in debt as a result of the HIPC and the Multilateral Debt Relief Initiative. And so we observe in the huge downward trend in debt, but then more recently, there's a substantial upward trend in the debt, and that's consistent with the fiscal deficit trend upward. And more recently, we have to blame expenditure as being the main culprit for the upward trend in fiscal deficit. No doubt about that. Now, 2020 was a perfect storm, as I indicated. Have a situation where you have a crisis and you have an election, right? Obviously, that's a time that politicians can afford to spend, right? And then blame the crisis for the spending. Indeed, if we look at the evidence, it's quite clear that COVID-19 is huge, huge. I have the data, but I'm not going to bore you with the specific numbers. And you observe that compensation of employees also increased by a huge amount, maybe about almost 30%. Huge. Well, what's the response for that? COVID-19, right? COVID-19. That's a perfect storm I'm talking about. And this is very different from the historical evidence that we observe. So thank you, COVID-19, for providing the basis for committing all this transgression. Obviously, there's a crisis when a country is unable to serve outstanding debt conditional on binding domestic constraints. And that's exactly what has been happening. So what's the solution? Our conjecture that within the rational political framework, right, rational choice, rational public choice framework, if you're a politician, you want to get elected, right? Obviously, it would be stupid not to want to get reelected. And how do you get reelected? You spend, right? And then you tax less. Indeed, during the crisis, government workers, service workers understand were relief of tax payment. That's wonderful. That's how you won the election. And so that's the kind of thing that happens within the political framework, what sometimes I refer as political economic disequilibrium. And you can have a cyclical situation in terms of the total cycle that we talked about, but it can also be the secular situation. The politicians make a lot of promises, right? Well, in the short run, during the short cycle, they'll go ahead and spend. And I remember I was a member of the President Economic Advisory Council, and I do recall in 2012, we had this committee, and the council made me the rep for this committee, and we met with the Vice President, beautiful edifice, as I recall. We went and I learned a lot. 99% of the discussion was about how to win the election. So they talked about strategizing. You can go ahead and make promises to the big contractors, you pay off the small contractors so they'll vote for us, right? Because they'll not be too unhappy, and so on. That's the kind of thing that goes on many times, unfortunately. And then you also make promises, and those promises have to be kept, right? I remember when Professor Arthur Mills was elected president, he said, look, you made too many promises. We cannot keep them because it would be fiscally impossible to keep them. And so 2010, don't bother, we're not going to spend on all these things. And then what happened? The political parachutes went to them and said, hey, what are you trying to do? You are going to destroy the NDC party? Now begin to spend. And in 2012, yes, they spent. And you see huge deficit in 2012, as I recall. That's the way it works. And then what happens is they made a promise, we're going to give you more regions. So they create more regions. Now you have 16 regions or 10 regions. That's a good way to increase costs, right? It is also a good way to get elected. And so it becomes secular. So do you want a university? Of course, who doesn't want a public university? So Volta region, you can have one. Even Somania, you have a university there, public university. All over the place, spend, spend, spend. And so in the final analysis, what are you going to have? You're going to have a disequilibrium situation where you end up spending much more than you tax, not just cyclically, but also over time. And that is what is responsible for our debt situation. So this is the debt on our backs, back-breaking debt, you can tell. And now you have to think, which way do you go? And the rest of the panels are going to provide the solution to that. So, ladies and gentlemen, thank you very much for listening to my spiel. Thank you.
Thank you very much, Professor Fosu. I will go straight ahead to invite Professor Peter Korte, who will discuss an analysis of the effect of second round of the debt exchange program. Please, let us welcome him.
Thank you very much. Good morning to you all, and to appreciate you for making time to join us this morning. It's a Monday morning, and usually people have to go to their offices before they plan the week, but we couldn't but have it today. So my work is to build on the excellent presentation by Professor Fosu, giving the background to the debt crisis, and to look at the second round of the debt exchange. But I think it will be proper if I spent like a minute or two to tell you about the first round, so that then it will be, I can situate my presentation. I have very limited time, so I'll try and be very quick with whatever submission. Professor Fosu has given you all the background, telling you how we have borrowed beyond sustainable levels, and therefore we had to engage in the debt exchange program. Now, you've seen that, yes, even during COVID, just to reinforce what Professor Fosu said, we spent on capital expenditure because you want to win votes, you want to stay in power. Who would hold a stick and allow a dog to bite him or her? You see, it's impossible unless you have strong institutions that will prevent that. This political business cycle will continue to haunt us. So we've seen several of the programs. In fact, prior to the debt exchange, we were way beyond the thresholds. You will see our PV, present value of debt, GDP ratio, 89%, above the 55% threshold. Then, if you look at our external debt ratio, you find 43% above the 40%. Debt service to revenue ratio, 28 above the 18% threshold, and so on and so forth. So clearly, all our indicators point that we are above the threshold. We are not doing so well. And I'm not surprised to see that the gap between ours and the sub-Saharan African average is wide, because all the indicators show that we are above the threshold. So we had to go to IMF for support, and one of the requirements would be to restructure our debts. So we had on December 4th an announcement by the Minister for a debt exchange program. The different scenarios were presented to us. No haircut on principal and all the issues. I won't go through this, but the different holders, categories of bond holders are there. You see the banks holding 31%. Banks that are supposed to lend to the real sector are holding 31% of government bonds. It tells you what kind of banking we were doing at the time. Then you find firms, institutions, foreign investors holding 10%, Bank of Ghana holding 10%, pension funds, etc. So the different categories of debt exchange, as announced, category A, category B, and category C, were all outlined for, and the different components were provided. Since this is not for me to do, so I would still continue to, but eventually this is what happened under the first round. For the categories, the coupon was 18%, 18 or 19%. Then we will find that it was reduced to 9.1%. The maturity period for the bonds were 3.8 years, but then it was extended to 8.3 years. We were told that in all, we were successful. 85% of the target of 133 billion cedis were achieved. Currently, this is where we are. You've seen that we've managed to reduce our debts to a lower level, to 70, 73, 74, thereabout. So it tells you it's coming down, but some marginal increments are also recorded after the initial reduction. It means we are still, the appetite to borrow is still there, especially domestic borrowing. Treasury bills now we hear is being oversubscribed. That is fine to some extent. We are basically crowding out the private sector, but the challenge there is that the interest rates that are offered is gradually going up, it will get to a point, it becomes unsustainable. Interest payments would increase, and we'll again come back to the same problem. Are we going to restructure again? Are people going to get haircut? So I think as we do this debt exchange program, we ought to be guided by the past, that as we borrow and continue to borrow, we ought to respect the thresholds. Can I see the screen rather than the video? Thank you. So the second round of debt exchange, we are going to see cocoa bills. 14th July, we have 2 cocoa bills it will be launched. So a total of 8.1 billion will be restructured. The interest payment of 13% instead of the 30% on the cocoa bills. Then we'll have 5 new bills that will be introduced during the period. Then we're going to also see local US dollar denominated bonds. The last issue was paying an interest rate of about 6%. It's going to be restructured. So we've seen the interest rate. We're going to see different bonds. The first one maturing in August 2027 with an interest rate of 2.75%. Then the other one will be maturing in August 2028 with an interest rate of 3.25%, payable semi-annually. Pension funds, there's some discussion to restructure pension funds, and we are told it looks like the leaders are amenable to this restructuring, so they are also going to sign up. Then Bank of Ghana, non-tradable debt. Already, Bank of Ghana has suffered a lot of hits already, and there's still room to restructure them. Then the energy sector, including dependent power producers, IPPs, are also going to restructure how much we owe them, about $1.7 billion. So this is the second phase of the key elements of the second phase of the debt exchange program. I want to compare with Zambia. Zambia, because they started the IMF program, it took them about 2 years. We were very fast within 6 months, and we celebrated it. But Zambia took 2 years. But let's see what the 2 years did for them. What lessons can we draw from Ghana? So the aim is to restructure 6.3 billion outstanding Zambian debt, and that is going to lead to economic reduction of 40%. They're going to restructure for 12 years, so longer maturity period, and the interest they're going to pay will be set at 1% during the next 14 years. This is 1% in the next 14 years, and then and the rest will not exceed 2.5%. If you compare with ours, you realize our rates are a bit higher. They're going to generate about 5 billion debt service savings between 2023 and 2031. But I must say, these are all bilateral debt. So they are dealing with the external people. I haven't seen much of the domestic debt. I tried to find out. Even when I was in Zambia a month ago, I engaged a lot of academics to find out whether they are restructuring domestic debt. So far, nothing. They've said they will do it, but nothing has come out. So there's not too much noise in Zambia about debt restructuring compared to the noise we find, because we have started with the domestic already, and we are shaving people left, right, center. And that is creating a lot of tension within the system. And you see what I'm talking about. Initially, this is their debt GDP. Their debt was even worse than Ghana, but yet you can see they've succeeded finally after the stalemate to restructure bilateral debt of 6.3 billion. One thing I learned by interacting with the Zambian academics is that they felt the previous government was too corrupt, and the donors had the same feeling. So that is why they were dragging their feet in signing, go and bring this, go and do that. But as soon as there was a change in government, the new government met and they restructured and had better terms. So that's how come it took them so many years. And that, I'm not saying it, this is what the academics told me. But this rate, we are told, the 1% until 2037 and then 22.5% thereafter, can be adjusted when the economy performs better. So that is enshrined in the agreement if reached with bilateral donors. I'm bringing this so that we see some of the benefits, some of the things I think we've shot ourselves in the foot. One is that the official creditors have accepted the position of the Zambian authorities that they to preserve the domestic financial system, financial stability, non-resident holders of local currency bonds and treasury bills will not be subject to restructuring. Very important to ensure financial stability. What have we done? Foreigners who own domestic bonds also got shaved already. So a lot of them are moving funds to Zambia and to other countries. They have more or less ring-fenced their investment, and they are not being shaved. So a lot of funds are flowing into Ghana and Zambia, ensuring stability. It makes sense to me because, one, we didn't have to scramble. If we had done this, we didn't have to scramble for treasury bills. Government didn't have to borrow so much from treasury bills because the capital markets is sealed. You have to borrow so much from treasury bills and the associated high interest rates, which would worsen the already precarious debt situation. Secondly, when we are competing with private investors for money, you are crowding out private investors. Government, until recently, we thought was the safest borrower. So if government is, even now, if government is competing with you for money, government will win. So we are basically crowding out the private sector. Three, the high lending rates. When treasury bill rates are so high, you and I will prefer to invest in treasury bills. We will not give it to the banks to on-lend unless the banks up their interest rates. So that is also driving the interest rates on the market and significantly hurting the financial sector. What we are doing by not exempting non-resident holdings of local currency bonds, the financial sector is suffering. We are not getting in more foreign inflows, and that is affecting our case. So I think it gives rooms for concern. So some of the benefits, I don't know how much time I have. Okay, so there are several benefits. One is sustainability. Once we have restructured our debts, we're going to ensure debt sustainability. And I hope we have learned from the painful lessons. Affordability as well, so that we will not relent in our repayments. We'll be able to pay our debts. It will lead to improved market sentiments, because once your ability to repay has improved, market sentiments will improve, FDI will flow in, and so on and so forth. Exchange rate impact, we know, is going to enhance the stability and the ability to trade on the forex market. Interest cost savings, once interest rates have been reduced, our repayments and in terms of servicing our debt are also going to reduce. But it has adverse effects, which we have to acknowledge. The reduction in the coupon rate is significant, and it's really hurting the banks. A lot of the banks are incurring losses, and in fact, the Bank of Ghana, huge loss, was as a result of the debt exchange, and we ought to be careful. Now we are talking about second round of debt exchange. Cocoa bills and other things that are held by the banks are again going to suffer restructuring, and that is going to hurt the bank. It will lead to more austerity because it's becoming burdensome for domestic investors who have already been hit by this loss. It can lead to inflation and then sharp depreciation of the cedi if we are not getting in more inflows. We have a challenge to face with the debt exchange program, but we have to be minded by some of this. So in conclusion, I think the debt exchange has been a very painful exercise, in my view. It's been a very, very painful exercise, and we should not repeat the mistakes of the past. We should ensure that we don't have this problem again. We also know that it is not debt forgiveness. Our debts remain. When you are restructuring your debt, it means you're asking that I will pay later, deferring interest payments, etc. And you would really have to pay this. The issue of China is a problem. I read that China says they are giving concessions to Zambia, but we shouldn't think all the African countries will have the same. They are not going to treat all of us the same. So getting China on board is a huge hurdle that we have to cross. China has some special relationship with Zambia, but there are a lot of Chinese people who are nationals of China. And recently, not too long ago, about 8 of them were recruited into the police service. And there was a public outcry, and they had to withdraw the Chinese police. So you can imagine seeing Chinese in police uniforms. It's quite a funny situation. But China is a problem, and we have to look at that. Government has to look at its spending, overspending, which results in all the deficits and the macro problems. And ensuring macro stability is very critical. We have to enhance domestic resource mobilization. Our revenue GDP is low, 13%, 14%, 15% maximum. When others are doing 20, 21, 25%, we ought to look at that. A lot of people are not paying taxes, and when we pay the taxes, how effectively we use this is a problem. We need to ensure fiscal discipline and prudent expenditure management. The questions that were shared, about 70% said corruption. If we don't manage our public purse properly, corruption will thrive and we'll be back to square one. So on that note, I think I will thank you very much.
Thank you very much, Professor Peter Korte. Ladies and gentlemen, as the presentations are going on, pen down your comments, your questions. We'll open the floor for you to ask. But in this section, we'll call on Dr. Sam Mensah to present the impacts of the current crisis on the future of the financial sector, with a focus on pensions fund and insurance. Please, if Dr. Mensah is ready, we'll take a 15-minute presentation, then we'll go straight into the discussions.
Thank you very much, and thank you for the opportunity to share my thoughts on the impact of the high debt situation of Ghana on the financial sector. I think our colleagues have given us a good background. Professor Fosu has given us a good background to the crisis. So I will immediately try to focus my energies on the financial sector and the firm sector impact of the debt crisis. And then we will share a couple of proposals for reform that might have a positive turnaround for the financial sector. I think we all is generally agreed that financial markets are essential to facilitate the efficient allocation of capital to the real economy, either directly or through intermediaries. I think for savers, markets provide a higher risk-adjusted return, allowing for the accumulation of wealth. And for governments and companies, the financial markets provide a medium for generating capital, which is usually done by issuing securities and therefore providing an alternative to bank borrowing. Where does the deficit come in? The deficit and the financial markets essentially link up in the fact that the markets support the financing of the budget deficit by facilitating the sale of securities issued by the government. Now, beyond financing the government the budget deficit, a regular supply of government bonds fills a variety of market needs. The first one is that because the government bonds carry the full faith and credit backing of the government, they provide a risk-free benchmark that serves as a benchmark for market interest rates. Government bonds also have low credit risk and usually are longer-term instruments that make them relatively attractive for investors such as pension funds and insurance companies. And they also facilitate the matching of long-dated liabilities with long-dated assets in the form of long-term government bonds. For example, insurance companies, particularly life insurance companies, usually have very long-term or long-dated liabilities, and they need to match them with long-dated assets. And the government debt market provides instruments for matching assets and liabilities for such institutions. So in effect, government securities market provides the nexus between the deficit, the public debt, and the wider financial sector. Now, what are the conditions that make this role possible for the financial sector? First of all, we need stability of market conditions. In other words, as government issues debt, it should also have an eye on maintaining stable market conditions. Therefore, it shouldn't be, the issues that come to the market should not be too volatile, because that tends to make interest rates also volatile. Empirical evidence indicates that the financial sector is more volatile than the economy as a whole. In fact, the standard deviation of financial sector GDP is 11.5% compared to 4% for the entire economy. And that implies that fiscal shocks will be amplified in the financial sector compared to the rest of the economy. We also need sustainability of debt obligations. Currently, the unsustainable debt situation we have for Ghana is showing itself in at least two areas. First of all, rising interest rates. When debt becomes unsustainable, borrowers are willing to, are charging a higher premium for government debt, and therefore interest rates tend to rise. We've also said already that unstable volumes increase the volatility of bond prices and interest rates, and therefore affects the values of investor holdings. Another condition is that market participants must believe that obligations under debt instruments, that is coupon payments and maturity redemptions, will be upheld. Recent developments, especially the debt exchange, violate these requirements for efficient intermediation. How has that impacted the banking sector? It is estimated that the debt exchange generated a 30% drop in the value of bonds surrounded under the program. And therefore, this has led to impairment losses for the banking sector estimated at about 19.4 billion. And in fact, only 6 out of 22 banks managed to capture the debt exchange program losses without impairing their capital. Huge tax losses, before tax losses of 8 billion in 2022, compared to profit of 7 billion in 2021. And we've had some liquidity issues. The bond exchange has resulted in the lengthening of maturities, making it difficult for banks to meet maturing obligations. There's a lot that, but we will just mention a few of the impacts of the debt exchange on the banking sector. I think we've had a good presentation from Professor Korte on that. Now, overemphasis on banks masks the distress in other financial subsectors such as insurance, pensions, and fund management. Let's take the case of insurance. Insurance companies maintain a significant portion of their assets in government securities, and therefore the asset impairment resulting from the debt exchange has affected the capital impairment of insurance companies. Perhaps that will be addressed with the Financial Sector Stability Fund, which will soon be outdoored. We don't know. Insurance companies have also suffered loss of liquidity, which is needed to pay claims because of the lengthening of the maturities of bonds exchanged under the DDE. In other words, coupons were lowered and maturity proceeds have been deferred, therefore making it difficult to generate the liquidity that would ordinarily be needed for the payment of claims. There are many other financial market institutions that have been affected by the debt exchange. For example, broker-dealers, the Ghana Stock Exchange, Central Securities Depository, all depend on trading volumes for their revenues. And just to give you a look at the extent to which the market has affected these institutions, let's look at the last two columns, cumulative trades from January to August of this year. And we see that trading volumes are down by 67.43%. And the trading values are down by 72.02%. Now, this translates directly into reductions in revenues for these two sectors, the stock exchange, Central Securities Depository, and broker-dealers. So as we speak now, maybe the results will come out later, but a lot of the institutions that depend on the trading in the market have suffered some huge revenue losses. We can say the same thing about service providers in the financial sector. Service provided under the pension funds, not usually, but they get their revenues as a percentage of assets under management. For example, fund managers, and there are 85 of them, it's a lot, receive on average 0.56% of assets under management. 18 custodians receive 0.28% of assets under management as fees, and pension trustees receive 1.33% of assets under management. Now, it is estimated that the loss in the value of assets under management is about 30 to 40%. And since these are the main sources of income, the loss in assets under management means that 30 to 40% means a 30 to 40% loss of income, resulting in job losses and insolvency of service providers. So if you go behind the banking sector, which seems to be the most prominent, there's a lot of distress going on in the financial sector, and we hope that there won't be further disruptions in the financial market. What is the economic impact of financial sector failure? The first one is that it affects public trust in the banking system. Consumers become worried, leading to a decrease in deposits and a reduction of lending activity. And this can have a detrimental impact on the overall economy. Failure of banks can lead to layoffs and job losses for employees working in the weakened institutions and related businesses. And financial sector losses can contribute to economic recessions or slowdowns, reflected in the disruption of credit availability, reduced consumer spending, and increased uncertainty. But the economic and financial impact is only one side of the coin. The flip side of the coin is trust. Financial markets cannot function efficiently without trust. And if you're looking at the individual investor, trust may take several forms. This includes predictability of behaviors from markets that are efficient, open, stable, and sound, and result in returns commensurate with risk. Trust also is based on the confidence that the rules and oversight of market interactions support the soundness, fairness, and integrity of markets. And finally, that both within and beyond the established rules of the market, participants' behaviors will be ethical in serving the interests of customers. Why is trust important in the financial sector? Probably more so than other sectors of the economy. First of all, there's a large degree of opacity and complexity in terms of the features, benefits, and the pricing of financial service instruments. So we're starting with a situation where the products are quite complex. Secondly, there's a risk present in the case of many financial services, and it's most significant in relation to savings and investment products. And finally, the characteristics of the typical financial services consumer, who is most often portrayed as lacking in expertise, uninformed, and not particularly involved in the decision-making process, makes the availability or high levels of trust very important. To have trust, there are several factors that are antecedents to trust: expertise and competence, integrity and consistency, communication, shared values, concern, and benevolence. Typically, markets that don't have adequate levels of trust have suffered events including failing financial institutions, and defaults on financial obligations to investors also erode trust. Some of the recent cases include failure of banks and other financial institutions, reference the 2018 crisis, government default on principal and interest payments of bonds held by the public, and we've seen that happen under the domestic debt exchange program, liquidity crunch reflected in financial institutions unable to meet withdrawal requests, and then arbitrary change of the terms and conditions of previously issued bonds, reference the debt exchange. Very importantly, factors that affect trust. One of the most important factors affecting trust is consistent failure of markets to return positive real rates of return. And if that happens, it means that financial markets cannot be trusted for wealth creation and preservation. I'll just give you an example of what is happening in Ghana with respect to real rates of return. For example, if you look at pensions, just looking at the last 3 or 4 years, we see that in nearly every year, in all the years except 2021, real rates of return were negative, minus 3.05, minus 0.74, and minus 0.32. Now, if investors continually realize that real returns are negative, they start distrusting the financial system, and they might start staying away from the system, and we have disintermediation, which is of course inefficient for allocation of resources in the economy. So this is I think it's a worrying problem, and obviously 2022 is going to be quite bad in terms of real return because of the high rates of inflation, 54.1%. What are the symptoms of a financial system with low levels of trust? Well, I think we're very familiar with some of these, but the debt crisis and the debt exchange program have made them worse. First of all, savers would rather keep their surplus funds at home or acquire real assets rather than deposit their funds with formal savings vehicles, such as bank deposits and securities. Savers are only interested in holding short-term assets. Good projects are not financed because lenders are unwilling to bear the risk of lending. Lenders are only willing to lend for short periods of time and low levels of financial inclusion. All of these symptoms of failure exist in Ghana. So, what are some of the things that we can do to rebuild trust in the financial sector? You know, trust is quite intangible, and it's not like infrastructure. You know, when your infrastructure breaks down, you can fix it by borrowing money from the World Bank or other places to fix the infrastructure. But recovering financial trust in the financial sector is a slow and painful process. Many of us would recall the seizure of bank accounts of individuals and institutions during the revolutionary years of the 1980s. I'm guessing that it's taken about a generation for some of these trust disruptions to be corrected. And if what happened in the past is anything to go by, we're looking at another generation before the events of 2021, 2022 start to fade. How do we deal with that, or how do we accelerate the problem of rebuilding trust? The first possibility is that we should think about developing a financial sector trust index. I think I looked around and I realized that I noticed that, you know, at the University of Chicago School of Business in the US and Nottingham University Business School in the UK, they have financial trust indexes commissioned by the the financial sector. What it does is that it provides trends in trustworthiness of financial services providers and provides guidance for regulators, codes of ethics, professional conduct standards. The question is, who takes responsibility for the Financial Sector Trust Index? Is it Bank of Ghana, SEC, NIC, NPRA? We have a problem of silo regulation so that the four regulators of the financial sector are sometimes not collaborating and taking charge of the overall picture in the financial sector. We should also strengthen consumer protection in financial services. One of the instruments that have been used in other countries, Canada, for example, is that they have a financial ombudsman, an independent body to resolve disputes between customers and their financial institutions. No such institution exists in Ghana, and because of the distrust of the system, which has been engineered by high debt distress and the domestic debt exchange, increasingly there's a need for an ombudsman who is able to resolve disputes between customers and their financial institutions. And then trust will also come back slowly, though, that as the public sees that government is strengthening financial sector regulation. But it has been suggested that financial sector regulation should be consolidated under a unified financial services authority so that the regulator can have a bird's eye view of the entire sector. I think that also reflects the increasing interconnectedness of financial subsectors. Some of these models exist in many countries, and maybe it's time to open discussion on how we can restructure the architecture of the financial sector to improve the level of trust in the system. Thank you very much.
Thank you very much, Dr. Sam Mensah. Ladies and gentlemen, I believe you are writing down your comments and questions. But before we move on to the next section, I have a few questions to our panelists to keep the discussion rolling. So, Professor Fosu, it was quite clear in your presentation that the debt behind our backs is quite heavy, and the picture you showed in your presentation on the path going forward is interesting, that there are different paths leading to stability. So in your perspective, what do you think can be done?
Hello?
Hi.
Working is working? Okay.
Yes, please.
I think that the fundamental problem is the political economy nature of the process. A political economy. It seems to me that the executive branch of government has too much leeway in terms of expenditures, especially in terms of expenditures. And they have the incentive to indeed utilize that leeway. So the best solution is to have greater executive constraint. Greater executive constraint. We can do that through the constitutional amendment, and I know that is very difficult, but we can do that through the localization process, okay? In the sense that if indeed localities did have autonomy of revenues, perhaps they'll be less dependent upon the central government, which means that they will not be seduced by the central government promising local public goods. And that's a problem. So I see that as being the real possible solution to the problem, and it may take quite a bit of time for that to occur. I hate to be too long, but I had a student from Ghana whom I supervised his PhD, and he at the University of Pretoria, by the way. He found, for example, that that localities have expenditure autonomy, but not revenue autonomy. And that's what we need to work on. I know that some of my colleagues at IGC is working on this particular situation, and I would like to wish them well. Thank you.
Thank you, Prof. Just a quick follow-up. In terms of the executive restraints, we know there's the existence of the Fiscal Responsibility Act, and then the Fiscal Council, which in essence do not have any legal backing, but just an advisory role. Going forward, what is your prescription?
Well, I happen to be a member of the Fiscal Council. Or maybe I should say I used to be a member of Fiscal Council, because you've not heard anything from the executive branch since the re-election. I hope that's enough.
Okay, thank you. So it brings us to the issue of constitutional review and the need to restrict some of the powers, really. Professor Korte, how do we build back confidence? Dr. Sam Mensah has said a lot about building confidence in the financial system post the DEE, but you also made an interesting remark on the need to have protected foreign holders of domestic bond. Can you explain that a bit? Because in principle, if we are to make it open up that foreigners have the freedom to invest in domestic bonds, maybe I should rephrase my question. Is that even allowed, and is it right for foreigners to hold domestic bonds, given the need for them to take out their resources at any point in time, change them, and repatriate whatever they make out? Can you explain a bit further on that?
Yes. Ideally, we should mobilize resources domestically, but we are unable to do so. We also need the foreign currency. We need the foreign exchange. That is why when we float Euro bonds or we float cocoa, syndicated loans, etc., the exchange rate is relatively stable. So we definitely depend so much on these foreigners or foreign investments to shore up our reserves. The catch is that once we hit them, they are investors. They look for alternatives. There are two countries, Ghana, Zambia. If you are shaving them and Zambia is not shaving, the rational thing to do is to move your funds to the safe, where you find your money to be safe. So unless we are able to raise resources enough to say that we don't need them, we have to play carefully. We cannot say we'll shut them out completely, because we cannot survive without that until we enhance our revenue GDP ratio. until our quench or test for borrowing is reduced considerably, that we can survive. Otherwise, we'll need them. That is why some level of protection, in my view, that given that Zambia is benefiting, we are in a competitive world. So if other countries are going to put in such policies and you are not, then you are likely to suffer at the end of the day. So that's, for me, the point I was raising about, you know, more or less ring fencing some of those investors. We ought to be careful the way we handle some of this.
Okay, thank you, Prof. And just a quick one. Do you think that we need to, probably the question I posed to Professor Fosu, a legal framework to sort of guide and restrict, for example, central bank financing of deficits, put a cap? We know that the Fiscal Responsibility Act put a cap on the deficit, which was removed during COVID. In your opinion, what do you think should be the way forward?
Every human institution requires rules and regulations. Once you give somebody a blanket check, he behaves the way he feels is right or behaves very selfishly. Now, we had a fiscal responsibility law, which during even Bank of Ghana's Act didn't allow the bank to lend more than 5% of its previous year's revenue. But because of COVID, we gave some leeway, we suspended. My disappointment is that the suspension didn't have a timeline. It was a blanket check. Parliament should have said, look, for this year, we are relaxing it. Next year, come, let's negotiate. Let's see what allowance will grant to you. So for me, it surprises me to hear Parliament saying they are going to pick it. I think we should also pick it at Parliament as citizens. They have failed us. You gave government, you gave the institution a blanket check, and they have used it to their advantage. And now you say, I'm going to pick it and remove the governor. I may be wrong, but I can't get it. I can't understand. We should have done it in a piecemeal manner. Yes, we enshrine this law. The law is there. We don't need a new law. The law is there. Fiscal responsibility law is there. Bank of Ghana has an act which says you cannot lend to government more than 5% of previous year's revenue. It's there. You suspend temporarily. But he said, I'm suspending it with no time limit. So that's the problem. We are using too much discretion. Rules versus discretion. If you allow too much discretion, then we'll find ourselves in the situation we find ourselves currently. Thank you.
Thank you very much. So I believe the question really is who regulates the regulator? Ladies and gentlemen, please note down your comments. We'll get back to you shortly. But because of time, I will quickly move on to the next segment where I invite Mrs. Saba to bring us her presentation on the impact of current crisis on the financing and delivery of social services such as health and education. Please let us welcome her onto the podium.
Good morning, everybody.
Good morning.
So the director says you should respond properly. So good morning, everybody. Good morning. And you see the flow of the presentations. And so I'm now looking at what this has impacted on social services, looking at health and education. So this would be the flow of my presentation. And let me start from a quote by the current WHO Director General, who says that the enjoyment of the highest attainable standard of health is one of the fundamental rights of every human being without distinction of race, religion, political belief, economic or social welfare. And if you look at SDG 3, it focuses so much on health and providing access to safe and effective medicines and vaccines for all. Now, to be able to do this, of course, we need money. And how have we fared in Ghana with doing this? Let me start with a little bit of background on the Presbyterian Church of Ghana and what we've been doing in the past few years. For those of you who know, the church currently has 61 hospitals, health care services, clinics, and training institutions across the country. We have 5 agricultural stations, we have several projects, and we have about 3,000 basic schools and kindergartens, 38 senior high schools, several colleges of education, 2 universities, and several vocational training institutes. And it's on that background that I come to you with some of this information, as well as civil society organizations that have worked in the field of education and health, and some of the things that we have found in the past few years. So I've just spoken about the Presbyterian Health, PCG's health services. Now, our health services is a part of a broader network of church-based institutions called CHAG, Christian Healthcare Association of Ghana. And under that, we have as many as 349 health facilities and health training institutions owned by several churches, and I hope your church is one of them. But we are doing a lot in Ghana, and in many instances, this is not showcased. Let me just pick on some of the places that we have hospitals, and let me see how many of you know them. Agogo. Who has been to Agogo? Just give me a wave. Com is in Ibri. Okay, and the Com Clinic is the first. It was set up in 1883 by the Presbyterian Church. Boku Hospital. Salaga. Ehiamatu. And that is in the western region. Asimpraso. Fushegu. Obrejima. Tiase, Mame Krobo, Donko Krom. Okay, so this confirms what we are saying, that most of the work that we do is in the rural areas, is in the hinterlands, out of the glare of those of us living in Accra, and in many instances doing policy. And we are the ones that are very much affected. And Prof. Fosu said it in his presentation, that social services is always the first to go when there's an economic issue. Now I want to start with this, and I hope you can see. As an alumnus of ISSER, I know you like graphs and tables, so I made sure I have some graphs and tables for you. Now this gives you data from 2018, and this is CHAG, Christian Health Association of Ghana. From 2018 to 2020, what you will see with the top line is the total outpatients. And you can see, of course, that it is going down. Total outpatients is going down, declining from 2018 to date. But you can see the down line, which is total admissions, it seems stable. So we are having less people coming, but we are having more people staying in. What it means is that more people are doing surgeries, more people are staying in for more difficult conditions than they would have in the past. Why is this? So these are the statistics. Nearly 6 million outpatient visits. But even out of that 6 million, we see a decline of almost 6.5%. And why is this decline? This is because we believe that most of the work that we do is for persons who are insured by the National Health Insurance Scheme. And in many instances, they are unable to continue with their insurance, and therefore they delay seeking health care and they go to other places. Of course, because we are focused on the National Health Insurance, we have stockouts. We are not able to have as many medications as we would love. Some of our, we are not getting the health insurance levies that is coming to us. And therefore, when people come to our facilities and they find that there is no medication, of course, the next time they will not come there. Now, for a place like Ohiamatuo, which is in the western region, one of the greatest things that we do there is serum for poisoning snakes when they are in the cocoa farms. Now, if that doesn't come, if somebody is bitten by a snake, the person most likely will not come to that facility but go somewhere else. And of course, we also have delayed payments of the National Health Insurance. it does not get to us, and I'll talk about that later. And then because of that, we are getting a reduction in the numbers of people who are coming to our facilities. Now, for any healthcare professional, public healthcare person, if you are getting less people coming to your facilities, it means that they are more healthy. Unfortunately, that is not the instance here. Now, this is the insurance status of our clients. Now, you see the difference between OPD insured and IPD insured. So OPD is outpatient and IPD is inpatient. And this will confirm the statistics that we shared earlier, that from 2018, 6 million people were insured, 88%. It's always been in the 88% range, the number of people who come to our place with health insurance, and this has reduced, not significant, but we have negative 1.1% reduction over the national average. But our OPD non-insured has also gone up a bit. And if you look at the IPD insured, it's the same thing. Those who are non-insured, we are having less and less of them coming in, and more people are insured. What it means is that because people cannot pay for their insurance, they are not able to access the services. And this is because the economic status is not good for them. And Prof was talking about political economy. This goes just beyond just health, but into what people are doing and how they are getting their monies. Okay. Now we are looking at GOG financial subventions for the past 3 years, and you can see that the subventions are actually growing. They're actually growing, but are they getting to us? Now, I want to take a few case studies and delve into the data. Once again, these are data that have come to us because of this conversation. I'm sure it has to go through a few years before it is confirmed, but this is what we find on the ground in one of our hospitals, and this is actually one of our biggest hospitals, that the subventions that come to Agogo, most of it goes into salaries and wages, and very little into other things. Now, if you are a national health insurance facility institution, you are not supposed to take money from clients, but the subventions that are supposed to come to you are not coming, and you have to take up a lot of the cost by yourself. What does that mean for the quality of healthcare that you are delivering to the people that need it the most in places like Donkokrom, in places like Tiase, in places like Boku, where there's an ongoing conflict? How do you support them? Now, this is for our hospital in Domahinkro. And even for Domahinkro, we have not had any government subventions for the past 10 years. Electricity bills since June have not been paid. And from the information I get from my general manager on the ground, current average electricity bill is about 90,000 cedis. How are we supposed to pay these bills when government is cutting the monies that have to come to us? And most of it is going into salaries. Yes, of course, salaries are going up, but then what is happening in the ground? Now this, moving on to staff strength and availability, I'm looking at the doctor-patient and nurse-patient ratio in child health facilities. And you can see that since 2017 to 2020, the doctor-patient one is the one in blue, it has actually become better. In 2017, we had 10,000 patients to one doctor. Now in 2022, we have about 6,700 patients to one doctor. The WHO average is 1,320 to one doctor. The nurse ratio is much better. But what is happening? Our staff members are leaving. And this is from the GRNA that said that just in 2023, this year, over 10,000 nurses have applied for clearance to leave, and more than 4,000 of them have already left. And most of us here in the room know a nurse or a doctor or somebody who is working somewhere who has left. I mean, Twitter is agog with pictures of people who are leaving Ghana, professionals who are leaving Ghana because they've just given up. Why have they given up? It is not, I mean, when we did the initial survey to say corruption, yes, there's perception of corruption, and people are not happy, and so they are packing their bags and they are leaving. And this is affecting us in healthcare. Now, I'm going into details to give you some data that we have actually picked on the ground. You'll see in Agogo that in 2021, 2 doctors left. So now 4 doctors have left, so that's 100%. For the nurses, 12 doctors left in 2021, now 38 are gone. And then the other staff, so we are losing radiologists, we are losing lab technicians, we are losing accountants, we are losing administrators as well. The same figure for Doma Hiko, you can see that in 2021, 8 left, in 2022, 18, and as at June this year, 10 have left, and many more are going. And these are living in the places who need them the most, in the hard-to-reach places where CHAG is working and doing work for them. So these are some of the things that we are on the ground and we are seeing. Now I'm moving to National Health Insurance because that's where the money comes from. And this is a research that was done by Send Ghana. They assessed the 2023 national budget and economic policy, and this is what they came up with. Over the last 5 years, NHIL and SNIT contributions have increased volumes, have increased revenue. However, only a fraction of this revenue is being transferred to the fund, and there's a lack of transparency. So we are getting less than, or just about 50% of the budget that is actually coming to us to be used to improve the quality of health, to be used to support the work that we are doing in the hardest to reach areas, to be used to improve most of the things that we are doing in our areas. Where does the rest of the money go? We have no idea. Now I'm looking at Doma Hinko's health insurance, and you can see that in 2021 they were paid 9 out of 12 months. In 2022 they were paid 10 out of 12 months, and in 2023 to date they have been paid 5 out of 12 months, and we have to work. What are the implications on healthcare after we've seen this data? And this is what I call the silent epidemic. It's happening. Are we seeing it? You will gradually notice very soon that all our indicators in healthcare, all our indicators with maternal mortality, all our indicators that we have done very well with, and I had other figures on HIV/AIDS, on non-communicable diseases, on other things I could have shared, but because of time, these things are really going down. So reduced healthcare funding, limited access to healthcare, reduced investment in healthcare, rising costs of medication, impacts on public health, and donor funding. All these things have very strong impact on where we are with the crisis, and this is happening on the ground. So from where we sit, we don't know whether GDP has gone up by X% or Y%, but what we are seeing on the ground is that people are not coming when they are supposed to come, people are not working when they are supposed to work. There's people who we have trained who, with government money are leaving because they are not being supported in the areas that are needed, and therefore Ghana's indicators most likely will go down. Now, I will go into education and pick on just a few discussion points. Okay. Now, most of this information I got from an EduWatch report that was done, supported by Oxfam in 2022. As well as some work that civil society has done in education. As I said, the Presbyterian Church itself has about 3,000 basic schools across the country, and I know some of you went to some of those schools, 38 senior high schools, and several other schools. For this one, I'll focus more on the basic schools and to see what is happening. So this report says that the GDP has doubled, but framework. And I'll just pick on a few of the things that they are saying. That under this second stage of the DDEP, Ministry of Finance is only allocating 12% of budget to education. It should be at least 15%. And it looks like in 2024 and 2025, that 12 will even be reduced further to 11%. And the Ghana School Feeding Program will also be cut by 25%. And we know the challenges that we are having with the Ghana School Feeding Program and the quality of the food that the children are having. Capitation grants is also the same thing. It hasn't been given for a while, 2 years in arrears, and the amounts are not significant. All these things are things that are ongoing now, and civil society is asking for government to look into that, to put their money where their mouth is, and to focus on the long-term developmental goals that are important for us. Because we are going into debt restructuring, looking at our economy, does not mean that the long-term goals that are important for us as a community, which is social services, that we leave them behind. And if I had gone into any other sector, such as agric, or any of the other sectors, you see the same level of dismal decline in the support that the state is giving to social services. And once again, I leave it for the economists and the analysts to do the conclusion. Thank you very much.
Thank you very much, Mrs. Teku Saba, for the more nuanced analysis of the issues, because sometimes we get a bit lost with the debt to GDP ratio and the tax to GDP ratio and all that, but this puts a lot of things into perspective with regards to the fact that the challenges we are in, there's a human face to it because there are human beings behind the statistics that are reported. Please, if you have not responded to the question, the poll we took, we kindly ask you to do that. Scan the QR code on the left side of the sheet you have and respond to the question over there. That is if you have not already done that. We will now move straightly to go and take the presentation by Dr. Theo Echampong. I'm sure you have a lot of burgeoning questions. Perhaps his presentation will put a lot in perspective. He is presenting on the different policy options or measures required to prevent a reoccurrence of Ghana's experience. Please, if Theo is ready, we are ready.
Hello, good morning. I just to check my sound and hopefully you can all hear me.
Thank you, we can hear you.
Brilliant. It's been a great and interesting conversation so far. In fact, a number of the points that I'll be making, the two professors and Dr. Mensah have addressed some of them, and just when the lady spoke as well on the social sectors, some of the points that she's making, I have a chart or two to sort of give a bit more, context to some of the issues. But because time is fast spent, I'm not going to belabor the point on sort of the root causes, because I think that has been addressed, except to maybe highlight one or two of the points that have been made, and then I would move pretty much straight into, okay, so how do we sort of address this going forward? And Prof. Fusu makes a very important point that the solution to the crisis and the issues that bedevil the country is politically driven, and therefore any economic solution that does not take into account the political imperatives, the incentives, the expenditure and the spending and all of that, and how to constrain them, is basically a fight that we would have lost from the very beginning. And that's also an important point that I want to sort of kind of highlight. So of course, the backdrop to all of this is what has happened with the COVID pandemic, and then we had Russia-Ukraine war, and this affected a number of countries, including, Ghana as well. And the interesting thing is that when you look at both of these two sort of recent events, across the continent, we're looking at almost 10 years of development progress that is being reversed, and Ghana is not an exception to this. And part of the root causes in all of this goes back to, we've been talking structural reforms and transformation since the 1980s, but it hasn't really happened at the level and form that one would expect. So what I've got on the screen there is just, a bit of the growth story of Ghana. And this is quite interesting because I also think that to understand the recent economic challenges, you have to literally go back to what happened after we discovered, crude oil, and after the major multilateral debt relief and the IMF program, etc. And what is really interesting from the data is in the 10 years before oil production started in the country, if you work out the compounded annual growth rate at a GDP level, the economy was growing on average by about 7% per year in compounded annual growth rate, right, terms. And then if you work it out from 2011 up until 2022, you're looking at a negative 11% growth. And you can see the spikes in the data here, which is, really pretty much all over the place, partly driven by the doomsday crisis that we had. Then we went to an IMF program, the 16th, you had COVID, and then we were back into another IMF program again. And part of the structural causes or the issues, Prof showed a couple of charts in his first presentation, but I just want to highlight much more on the more contemporary things, right? You can actually see this major issue with expenditure in the country that we need to or haven't fully addressed in that regard. And consistently over the period, every year between our revenue and our expenditure, you've got almost like a 5-6% gap. And that is what then keeps adding onto the public debt to the point that the debt now becomes unsustainable and you have to, in a way, find means of addressing it. And you can also see it a little bit more in terms of some of the data points that I took my time to go and dig through all of our budget statements that have been read from the early 2000s and just pick the numbers on the appropriations from revenue all the way down to expenditure. And you can see something remarkable starts happening where from about 2012, 11 onwards, consistently the deficit or the balance starts, increasing to the point that we find ourselves having to then go back to the IMF and other places to try and finance the deficit, or if we can't, go and borrow from the external market to do same. And this is a major structural issue that is driven by the political economy. And to the extent that we have not fully, in my view, taken that into account, most of the interventions that the government is implementing, even including under the IMF program, would only yield minimal results if we don't fundamentally address the issue of election spending and spending that does not really drive growth in and of itself to the point that it trickles down to the greater majority of the population. Prof talked about the election overruns, and I just want to highlight that quickly here and then talk about some of the solutions. So here, what I've got on your screen is you can actually track the difference year on year in terms of change between our revenues and also our expenditure. And what is quite remarkable in the last 12 years, and you can see this if we extended the series back a little bit, is that you see this big or major spike, right, in election year overruns or in years that you have big and contested elections, to the point that even when revenues are underperforming, we still end up spending sometimes 10 times the difference between that revenue underperformance in terms of our expenditure. And this is driven by the political economy, the electoral cycle that Prof and others have alluded to. And I want to again show a contrast between Ghana and Chile in this regard, right? If you look at Chile, just on this blue line here, even when revenues are underperforming, right? So such as during the financial crisis of 2008, 2009, you see them maintaining a fairly consistent expenditure growth profile, right? So yes, it goes a little bit up, it comes a little bit down, but largely, if you put a trend line through this data, you see, almost a flat trend line. If you compare that to Ghana over the same period, from 2000 to 2015, you can extend it forward to 2022. You literally see this haphazard, right, pattern where when our revenues go down, expenditures go down, and then likewise when expenditure goes up, sometimes the revenue again goes down, or other times it even goes up. So there's really no pattern whatsoever, especially on the expenditure side of things. And this is driven by the political cycle. And then there's also a bit of commodity price, effect in that. So we tried to correct this by setting up a fiscal council, Fiscal Responsibility Act, etc. And like the point has been made, we suspended all of that during the pandemic in an election year, and that even led to a much more worse fiscal outturn for the country than one would even have anticipated. Also, at the heart of this expenditure problem is the issue of major inefficiencies in spending. This is a chart from some work that we did back in 2019 for the social sectors in the country for the Oxford Policy Management. So we looked at health, education, and social spending. And if you were to put all of the issues in this sort of, diagnostic chart, you can see across the board, there are major leakages within the way we formulate budgets, leakages in terms of how the revenues are even spent, and then issues around contracts that are driven or influenced by political processes. So to the extent that we don't address these root causes, the symptoms, which is the issue of the high debt and the indebtedness and the restructuring of the debt, is only going to be a temporary relief and not, get us to the point where going forward we are addressing or fundamentally fixing the issues that bedevil the country. So I just thought I highlight these just again to paint a bit of a picture. Some of them have been addressed much earlier, and now I want to quickly talk about, okay, what are some of the possible sort of options and measures that we could probably introduce to try and avert this sort of crisis going forward. I want to start first with our tax and spend policies. So I want to look at firstly on the revenue side, and then I'll talk about the expenditure side. So Prof. Korte made a remark about the need to increase the revenue base. That is true. So basically, if you break down our tax handles into both tax, non-tax, and other revenue component, almost 70% or 7 in 10. So for every 10 cedis of revenue that we collect, 7 cedis comes from, the tax revenue component here. And if you even break that further down, most of it is coming by way of, ad valorem taxes and VAT and things like that. Now that structure needs to change going forward, and there are opportunities to do that in areas such as with the digitalization that is being pursued, and in areas like property taxation and related matters. So let me show quickly what I mean by this on the next chart, where I look or compare Ghana's tax structure vis-a-vis other jurisdictions. So in Africa itself, and then also, with the OECD and the Latin American countries. And you can see that in terms of our structure compared to even South Africa is collecting about 6% of its tax revenue from property taxes, and the OECD average is around 6%. I think we've got a tremendous opportunity going forward to really implement this in a way and manner that also safeguards the financial viability of the municipal and district assemblies. I know there are some test or pilot schemes that are being implemented currently, but there should be an opportunity to input and fine-tune the process, going forward. There's also an opportunity, in my view, when it comes to individual taxation. So as you formalize and as we get more and more people roped into the formal economic structures, then it should be possible to actually get more of the tax handles coming in directly from people paying PA, YE, and other taxes. So currently we're doing 14. Even Rwanda is doing about 23% when it comes to the payment of individual taxes. So we need to shift the burden from these consumption type taxes into more other tax forms that are more equitable, but also sustainable, going forward. Then there is the issue on the expenditure and the spending as well. And the interesting thing is, when you do a simple analysis of just tracking the growth rate of public debt versus the growth rate of GDP, there's even a negative correlation in this regard, right? I haven't gone further to even do like causality and all of that, but in and of itself is quite telling, in the sense that we have been borrowing, especially since 2008-9, and more so with the oncoming of crude oil production. But you don't tend to see this borrowing actually driving productive growth in the country. Prof. Fosu made the point that debt can either enhance or hinder growth. And in Ghana's case, just looking at some of the correlations here, without like further analysis, you can actually see that there's no connection between our borrowings and actually that driving productive economic growth to the point that it trickles down to the greater majority of the population. And that's even become worse, as we know, under the COVID, and then with Russia, Ukraine, all coming into account. And you see this again. I want to paint a picture here, right? If you look at how our politics has been run, and here I've got the manifestos of our two main parties, NDC, MPP, and you can almost see the change or the swap of wording between the 2016 and the 2020 manifestos, right? But if you look at the details and opinions some of these manifestos, they are not driven, in my view, by any deep analysis of the structural problems that bedevils this country. So in 2016, the NDC had a manifesto. The title was Changing Lives, Transforming Ghana. In 2020, MPP had a manifesto, and somewhere in there it's also got Transforming Ghana for All. In 2016, NPP's manifesto had change an agenda for jobs. And there's something in there about creating prosperity and equality. You can swap that with the NDC manifesto of 2020, and you can see similar wording in terms of jobs prosperity. So at least there is something in there, but the devil is in the detail. And the detail is that when these parties often get into power, the implementation of these policies are not linked to the broader national development sort of agenda. And number two, most of the policies are not properly costed. So you then end up with a situation where these things are being rammed in and being implemented and end up adding more onto the debt situation of the country. So the solution to that, in my view, is to push for an alignment of our medium-term plans to both government policies having a very clear business case. So I've got an example here where I went to the UK government website, and for any major policy intervention that they would implement, including even aid programs, there are two key documents that are produced. One is called the business case and the summary, which shows you what we want to do. So call it a policy document, why we're doing it, and how this connects to a broader sort of development agenda. But then there's also a logic framework that has very clear indicators in terms of inputs, outcomes, and input, outputs, outcomes, and impact. And I think this is something that those of us within sort of the development space and the civic advocacy space should be pushing our government to be implementing it. So what I mean is that there should be no spending commitment without first producing a policy document or sort of a white paper, and then number two, a business case that shows a clear intervention approach, the underlying assumptions, the financing requirements, and even the monitoring, evaluation, and learning requirements that connects or bridges the current intervention to, for example, a medium-term policy framework as we have. So currently we do have this sort of framework, but if you do a deep analysis, you will see that many of the government programs and interventions don't speak to this policy framework. In fact, the baseline indicators and what you track to see whether or not we're making progress on this is at variance with both party manifestos and government policy interventions. On the expenditure, second point quickly to try and wrap up is also the idea of the accountability by some of the state agencies and institutions. So for example, the Auditor General, Public Accounts Committee, procurement, and all of that, I think we need to strengthen these institutions. And this calls for major amendment to the legislative basis which sets them up, to give them more autonomy and to give them independence or insulate them from the political pressures that some of them also face. And then lastly, on financing and what to do about it, I think the Zambia case is quite interesting. But beyond that, what I think we could do going forward is things to do with, fiscal decentralization. Some of our MMDAs are in a position to actually do a little bit of borrowing to run their own programs at the district or the municipal levels. At the national level, we must only borrow for projects that, one, have a clear investment return profile, and to be careful about the use or the giving away of sovereign guarantees in that regard. And lastly, we've been talking a lot about, green growth and how Ghana can drive a green growth agenda. And I think there is an opportunity there with something to do with, climate financing, especially as we're thinking of or doing the external debt restructuring. I would argue that any savings that we make, either by way of principal or interest repayment, should be channeled into some sort of ring fence fund that can allow us to finance our climate or energy transition agenda going forward. But fundamentally, the problem that we have, in my view, is a political problem. All of the economic issues that we've been discussing are just symptoms of a much, much bigger problem that we need to address. And that problem lies in the political economy. And that's what we've got to address. Thank you.
For that presentation. Ladies and gentlemen, I believe you agree with me that it's been a very insightful session. Please let us do it once again. Give them a round of applause. Our panelists have been awesome. So quickly, because of time, we will move a microphone round and ask our audience to ask a question or comment on the presentations that have been delivered this afternoon. We encourage you to make it quite snappy so that it can go around. You can direct your question to a specific panelist and then we'll seek a response appropriately. So who will break the ice for us? Or we are all happy, we can close. Any questions or comments? Yes, there's a hand over there. The lady in front, yes.
Thank you. My question goes to Prof. Korte. So when you look at the maturity profile of the new GOGs, you realize that most of them are expected to mature in 2027 and 2028. And in 2028, so it's an election year. So the question is, are we going to revisit DDEP? Or you think they are government is putting down some measures so that we don't go back to DDEP? Thank you.
Thank you. We'll take a couple of, yes, any other hand? Professor Charles Saka.
Yeah, thank you very much. I think with all the presenters, judgment, I think one area which needs to be highlighted, according to Proverbs 24, verse 10, says, if you faint in the day of adversity, your strength is small. So the reason why Ghana is where we are is because our strength is weak. And I think Theo tried to raise the issues. We have not invested adequately in building productive capacity that makes the economy versatile and resilient. And that you can trace it, not from the fiscal side, but from the balance of payment side, which I think we will need to look at. When you listen to the Minister of Finance in his media, I think he hinted at the problem. He said our decision to go to the IMF again, despite what we had determined earlier, is a short-term measure of balance of payment support. What we really need is a major structural shift in our economy. So the admission is that the problem isn't even fiscal deficit, even though that's important, is a balance of payment problem. We go to IMF because we have inadequate exchange currency, foreign currency, which means we are not trading prosperously. We have not restructured the economy, gained from exports. So my analysis over the last 10 years, for example, we have lost close to $30 billion just on the balance of payment side. That's what affected our reserves. That's what made sure that we lost a lot of currency. And our IMF is mainly to go for about $3 billion, just because we are import dependent and we have, our manufacturing sector is collapsed and we import almost everything. So the deficit really is current account deficit, trade deficit, and balance of payment deficit. For us, fiscal deficit is good. We need to raise more revenue, spend wisely. Even if you do that, and you are still a country that imports more than exports, you don't solve the payment problem. You always need IMF support. And I think that's an area that we need to look at.
Thank you, Professor Charles Saka. Yes.
Thank you very much. My question goes to Prof. Fusu. Considering the establishment of the new BRICS Development Bank, could you classify how these developments might influence Ghana's stance on external debt and its positioning within the international financial market? Thank you.
Okay, I think we have a couple of questions if our panelists would want to take a bite at it. Professor Korte, yours was on the DDE and maturity of bonds in 2028.
Yes, some are maturing 2028, which is definitely going to be an election year, but government is in continuity. I don't expect that elections would affect payment, except when we don't raise the needed revenue to finance our expenditure. But more importantly, your question about whether we are doing anything differently so we don't go back to the debt exchange program. And you recall, I said it is a very painful exercise that I don't expect us to repeat the mistakes of the past. How we do that is another, for discussion, because as we've all heard, it's a political economy issue. As for economics, we know what to do, but political economic decisions that we put a school here when the population in that catchment area is not adequate to fill the E-block classrooms. A political economic decision to invest in certain things that we think it is not appropriate. And it's up to us to address this issue. Are we doing anything differently? If you ask me, I will say no. I'm yet to be convinced that with the IMF program, we are doing something very new. We are investing more in agriculture. We are investing more in industry. We are going to invest to ensure that we transform the structure of our economy. It is basically primary product driven. Our exports are mainly primary products. We don't add much value. And we tend to depend so much on import. I am yet to see the Planting for Food and Jobs Phase 2. It has been launched. I am yet to see the major impact that is going to make. Yes, we are now going to focus on large-scale commercial agriculture, but we are yet to see the impact. So it doesn't become another political mantra that we are doing Planting for Food and Jobs, we are doing this, but we are not witnessing the gains that one would expect. So it's early days. If you ask me, I'll tell you it's early days yet. Let's wait and see if the IMF program and the new policies that are being implemented will bring out any new results. But as far as I'm concerned, I haven't seen much. Revenue mobilization. Yes, we are increasing revenue. GRA is introducing this property rate collection and online payments, etc. But we haven't managed our expenditure very well. We are still spending. There's been a lot of noise about reducing the size of government. Nothing has happened. So we are yet to see the major shift in the paradigm on whatever we find ourselves in that led us to the current woes. Thank you.
Thank you, Professor Koti. Professor Fosu, would you want to?
Yes. Thank you, Madam Chair. I didn't quite hear the last question that was addressed to me, but I would like to comment on Professor Sake's commentary. I agree with him on the issue of the lack of structural change in the economy. However, if it's a question of imports versus exports, Ghana has been doing very well lately on exports versus imports, such that we even run balance of payment, credit, not deficit.
Yeah.
So that's not the issue. The issue is how we can structure the economy in terms of, say, export diversification. And the right policies to guide export diversification. I've recently completed a paper that shows that we can attract the right FDI if we had the appropriate infrastructure. This is not new, but the infrastructure quality in Ghana is very poor. And that is important. Otherwise, you attract non-export diversification kind of investment into the country. And that's what we need to work on. And the balance of payments actually is an outcome of the lack. So what happens if you have a situation where you have foreigners owning our means of production, then even though we run export, we do well in terms of exports versus imports, all right? The problem is that when you have the current account, you have flows going outside of Ghana to the owners of this fertilizer production. So we need to reorient ourselves so that we have more Ghanaian residents owning the fertilizer production. So the problem is not export versus imports. The problem is the structure of the economy. And we have to seriously think about how we can transform the structure of the economy. Yes, infrastructure is one of them. Human capital also happens to be another one, and so on. These are the issues that we ought to be concentrating on. Thank you, Madam Chair.
Thank you, Professor Fosu. I think the question on development committee, rephrase your question whilst we take another round of yes.
My question basically is on that is the new BRICS Development Bank.
Okay.
I mean, could you clarify how this development might influence Ghana's stance on external debt and its positioning within the international financial market? Thank you.
Right, that was addressed to me, right?
Okay, I think it can go to any of the panelists who would want to take a, yes. Any other questions? Okay, you have a hand up in front. You can give it to the gentleman, yes.
Good afternoon, everyone. My question is directed to all the panel, especially Dr. Sam Mensah, because he has been inside and outside. And my question mainly is, how do we get the decision makers to listen to all these beautiful insights? Because as far as I'm concerned, I think we've diagnosed the issues and we have solutions. We seem to have solutions. So how do we get, is there a mechanism in the finance ministry or parliament to, listen to all these wonderful insights? So, yes, I think.
Okay, thank you. There's a hand up, a lady in front.
Thank you so much. So my question goes to every one of the panelists. I really understood what was discussed, looking from the economic perspective and the social perspective. And I have some. Where does the money go to? If you take national health insurance tax from everything we buy and everything we do, and we give about just 31%, what happens to the remaining 60 plus? The second one is, if we are saying that we should reduce the tax on consumption, and let's say we want to introduce tenants or property tax, won't it be another burden on the Ghanaian who has already been affected by the debt restructuring, now paying all different kinds of tax? And now we are going to add that. What happens to tenancy rates? Won't it increase it? I just want to understand. Is it that this tax will replace one tax, or it will be another added tax?
Okay.
Thank you.
Thank you. Thank you very much. Okay. Yes, I think we'll take the questions for this round and then bring the session to a close. Yes.
Thank you very much. I agree the problem is political economy. But I think we are too laser focused on national level political actors. Let's take expenditure. Development experts have argued that you need an activist state to spur development, right? But since the advent of structural adjustment, it is exactly the activist state which has been rolled back. And when Mrs. Saba did a presentation, sometimes when we look at the expenditure, we look at on the political side, right? But then we have expenditure on social services, which is an aspect of citizenship, which we tend to ignore. So I think that's important. Then we look at the revenue end. If you look at the dance going on in Niger, right, about national ownership of resources, which is really important. And part of the structural adjustment prescription is to roll back the state and its influence on and its involvement in economic activities, right? A couple of weeks back, there have been the anniversary celebration of the coup in Chile and in Iran, right, which took place because their leaders nationalized assets. And there are reports, I don't know whether it's been confirmed yet, right, that Niger increased the price of lithium from 0.8 cents to 200 euros, right? Now, if we have such control over our resources, then I think a huge part of the revenue issue would be solved. Of course, we have to do more in terms of raising revenue domestically, in terms of direct taxes and all, which is also an aspect of citizenship. But I think we have to look broader, right, at the geopolitical as well as the national level factors which are constraining the debt management issue. Thank you.
Okay, thank you very much. I think one thing we are missing is we do not get to know the names of the people asking the questions. Please, if you can.
Thank you very much. My name is Kenneth, and my question is directed to Dr. Chiu. I really loved his presentation, and he spoke, and at the end of the day, he talked about borrowing, which was interesting, and accountability. He spoke about amending the laws that create the structure for the institutions so that they can be more autonomous, they can make their own laws so that they will also be insulated from government control and intimidation. And I think it's very good. But when you say this, the politicians will look at you and they will not do it. They have listened, but they won't do it. Is it not better if coalitions can be created of think tanks, economic policy institutions, academic institutions such as ISSER, whereby they come together and put in petitions, like make moves, kind of activism, so that the government are forced, so that when even the citizenry see this going on and these political parties in power and they don't want to listen to the demands that are being made on them to autonomize the institutions, then the next party can be given the mandate, and if they do that, they will be accepted. So is it that it's an unwise thing to do, or these are some ways that we can take to cause change? Thank you.
Okay, thank you, Kenneth. I think we'll take a last question and then the panelists will respond. If there is none, okay, there's one. Can you make it snappy, please, because of time?
Yeah, mine is not really a question to the panelists, but it may be more administrative. If we say that the issues that we have now as a country is more driven by the political economy, and we have an important forum like this, I'm just wondering whether we have made efforts to get the political parties, institutions like the NDC, MPP reps, Parliament, their Finance Committee, Ministry of Finance reps to come and participate in some of these important discussions on the national economy.
Okay, thank you very much. I think that is a very valid point. So our panelists, Dr. Sam Mensah, if you will start by responding to the question that was addressed to you. It was, how do we get the politicians to listen, given that you have been in a position to advise ministers of finance in different administrations? And closely related to that, we also want you to make give us your projection on the way forward with regards to building trust and confidence in the financial system.
Thank you. It's a difficult question. How do you make politicians listen? I think it's a question of incentives. I think currently the system that we run very much incentivizes politicians to do what they are doing now, that is, spend procyclically and with very significant payouts arising from corruption, arising from very poor procurement management. But we already have a number of tools that I think we can continue to refine, and the purpose of doing that would be to push policymakers in the direction of implementing more responsible and efficient policies. We have, for example, provisions in the Public Financial Management Act for sinking funds to retire debt. And the benefit of the sinking fund is that you provide for the repayment of the loan when you have, at the time that you incur it. But we've not been using it, so we can pull out some of the tools that we already have and try to refine them. And it's a question of realigning the incentives so that the politicians will be continually be pushed in the right direction. We have the Fiscal Council. If you look at the way the Fiscal Council operates, it does not have independence. It does not have the independence to make pronouncements that will push the executive in the direction of responsible fiscal policy. So that needs to be done. I think that we need to get back to the drawing board and look at the structure, the mandate and the legal backing of the Fiscal Council and realign it to be independent so that it can have a voice in pushing politicians towards responsible fiscal policy. We also have the fiscal responsibility law already on the books. And again, we have to take it up and then try to, with the experience that we've had, try to improve that. For example, we don't have any numerical fiscal rules in the Fiscal Responsibility Act. I think we have maybe one or two. One is the 5% deficit ceiling, and there's a positive primary balance. But it's not good enough. I think that given the proclivity of our politicians to overspend, I think we need to increase the fiscal rules in the Fiscal Responsibility Act, such as, for example, having a fiscal rule in there that relates to debt to GDP and so forth. In terms of building trust in the financial sector, it's a very tough thing. I think, as I made the reference to the fact that, it's easy to rebuild infrastructure when you break it down because you can borrow the money. But it's not so easy to rebuild trust when you've lost it. But we can still make a start. I think I've made the suggestion that we need a financial ombudsman to be able to adjudicate disputes between customers and financial institutions so that the trust will be built up to the point where investors or consumers actually believe that they will be fairly dealt with. Otherwise, they will stay out of the market, put their money into real assets, or if they are investing, it will be for very short periods of time. We also need to improve our financial regulation. Currently, it's not very clear who is responsible for addressing the grievances of customers or consumers in insurance, for example, or the NPRA. So we need to do some thinking about how we regulate our financial system. Some have argued that it's better to have, and I think many countries are increasingly moving in that direction, of having a unified regulatory system where insurance, securities, banks, all come under one regulator so that we don't have this current fragmentation. There have been times when we have realized that the regulatory agencies are not talking to each other, and therefore there's been a lot of regulatory arbitrage. But I think we have some things on the books that we can continue to work on. Unfortunately, I think it's going to take a very long time for confidence to return to the market.
Thank you, Doc. Dr. Theo Echampong, if you are alive, can you respond to the question that was addressed to you?
Yes, on the coalitions and the petitions, yeah, he's absolutely right, and it's something that, as a civil society person myself, we are beginning to push more of. So in my view, it's no longer the case just to have an ISSER or an ASEP or IE or Imani just, advocating for one issue or the other. We need more broad-based coalitions, and then we also need to then move to the level of more activism and advocacy on the issues. As for what to do to resolve our problems in Ghana, we've known it. It's been written about and researched for well over, in my view, 20, 30 years now. So it's really a question of how to get some of these coalitions, because, the civil society players and, other entities within the space have a lot of agency and also have a lot of convening power in terms of driving some of these change. So absolutely, I do agree with that point about more convening and the ability to drive or push for some of this change going forward. Just two quick other remarks to make on the policy side of things. Prof. Kote was talking or gave the example of planting for food and jobs and phase 2 of that. Now the question I would put to all of us, has anybody seen a document that has done a proper evaluation of how phase 1 worked, how phase 1 is linked to your national development strategy, what sort of indicators we can actually see then to say, okay, we are now in a position going forward to implement phase 2, and therefore some lessons that would have been learned would be included in that. As we speak, I don't know, and I have not seen anybody, and this is really at the heart of most of the conversations that we're talking about here, right? So political decisions are made. They have policy implications, but the thought process that leads into making and fine-tuning these policies sometimes excludes the very people that are meant to help them address, right, the issues, or even solicit for input from people within the civic or the development space. And it's a major problem that needs to be addressed. Hence why I said that, look, every major policy or intervention must be subjected to rigorous peer review, number one, and this needs to do two things. It needs to establish the evidence base, and then number two, make a clear business case for it going forward. On the institutions, I agree with the point that have been made about reforming, for example, the Fiscal Council, and in fact, the introduction of a rule on debt. So we'll have both a debt ceiling and then we'll have a deficit ceiling. So Dr. Mensah talked about, currently we've got only a deficit ceiling, but there's no debt ceiling. And the empirical data or the evidence shows that in most jurisdictions where you have both a deficit and a debt ceiling, you tend to have much more control over the public finances than if you had one or didn't have any at all. So those are a couple of points that I would add to that. And at the level of Parliament, what I think can be done, and I have pushed for this again in other fora, we need to have an independent, budgetary office at the level of, of Parliament. Kind of like what happens here in the UK with the Office for Budget Responsibility, in the US, the Congressional Budget Office. And this would allow further input and fine-tuning of policies to then allow the political sort of implementers going forward to subject these policies to much more rigorous peer review. Thank you.
Thank you very much, Dr. Theo Champon. Whilst Professor Fosu and Professor Korte prepare for the response to the other questions, Mrs. Stego, how do you balance the need, because it is quite clear from the discussions that government has to reduce expenditures and increase revenue. On the expenditure bit, that is where you comfortably sit. And so in that sense, the need for increased social interventions, free SHS, livelihood empowerment, NHIL, and all others, against the background of the need to reduce expenditure, what would be your position on that?
Thank you very much. There are things that are non-negotiable, and these are rights that are inherent to us as Ghanaians. The right to health, the right to education, the right to good, the basics of life. And making that priority is very important. And I think the government needs to prioritize that. And if you do that, that is the basis for most of the things that we are talking about. Because it's not about what is in the coffers, but it's about what is important to the people that you are supporting and you are serving, and what will make your country better than it was. If you look at the work that civil society has done over the past 20 years, it's been a lot of work on monitoring how these expenditures have been used. Quality versus quantity. Where has it gotten to? What are the challenges, and how can we as civil society support them? And so you will notice that we have a lot of, from the time of HIPIC, we had HIPIC Watch, watching how HIPIC was used. We had Tax Justice, looking at how our taxes are used. We have EduWatch, looking at how education is used. So many things focusing on the things that are important to Ghanaians and to make them work very well. And this has to continue. People have asked the questions about how do we make our voices heard? Where does the money go? These things about the rights of citizens and making sure that we continue to do that. There is a black box in Ghana here, which we call the political will. And when you do your analysis, problem, cause analysis, fish box analysis, Ishikawa, at the end of the day, it gets to a place where you call the political will, and we just drop everything there. I think we have to open that political will box. It's not just enough to say that political will and we give up. What is in that political will? Yes, political economy, we are looking at who are the actors, what are their incentives, why are they working what they are doing. But we also have to ask ourselves, what are we also doing to be able to input into the political will? Now, just one question. There's a local government election coming up. How many of us are going to stand? Local government election. Are we even aware of it? What are we doing in our communities and our vicinities to do that? So it's inputs into us as well as citizens to be able to push that. And somebody was talking about the activism state, the rights of citizens, and what we have to do to ensure that our state is there. The information is out there. It is hidden in open sites. We have to take that information and use it. And the more we use it, I believe that there will come a tipping point where these things will change and our government should be better. So please don't give up on Ghana. don't give up on Ghana, because those of the people that we support in places like Tiase, in places like Ohiamatuo, if you give up here, then what will they do? So that is what I want to add to it, and to say that there's more work ahead and we all have to put our shoulders to the wheel. Thank you.
Thank you very much. That looks like an excellent closing remarks. On that note, if Professor Fosu, if you have anything, then I'll call Professor Korte.
All right, okay. Yes, thank you very much. Just essentially that to solve many of these problems, we need effective decentralization. Effective decentralization. Because when you have a situation where local public goods are free, quote unquote, there tends to be quite a bit of rivalry. And it is this rivalry that tends to push up these expenditures. So we need to wean localities from the central government in terms of revenue. I think that's quite critical. And we also need to take procurement out of the political process. Take procurement out of the political process. How we do that certainly is quite important, but you can have an independent committee that is not politically aligned to decide what is necessary to spend funds on, necessary. And you can have the political process provide the funds that are required to implement the necessary priorities. Final point is culture. Trust and culture. There was this issue about the fact that there's little spending on primary education compared to tertiary. I think it's an unfortunate wedge that we need to improve the civic education in the primary sector, the primary level of education, to ensure that we have good citizens. And I think that's critical if we want to develop trust.
Thank you very much, Professor Fosu. Professor Korte, I think the last question, the question on property taxes and your closing remarks.
Yeah, okay, thank you very much. I think there was a question about where does the money go. Mm-hmm. I had some figures for you, maybe. Yes, so you find that interest payments as a proportion of total revenue is 37.1%. That is, if you take the 2023 budget statement, 37.1. Compensation to domestic revenue, that is wages and salaries compensation, 32.2%. Then statutory funds to revenue is 21.2. So if you sum up, 89.5% of our total revenue goes into the three I have mentioned. Goods and services, capital expenditure, other expenditure have to scramble for the 10.5 that is left. So that tells you how skewed our expenditure is. We spend so much on wages and salaries compensation as well as interest payments. Now, the point about property tax, yeah, we need to tax. We need to find a way of taxing incomes. Property rates are one way by which we can raise revenue. I think from Theo's presentation, there was a country that was making so much, I don't know if that is Professor Fosu or South Africa, from property taxes. We have to tax property. It may translate into some increase in rent payment, etc., but it has to be done. For me, it's not just the taxing, but how efficient we use the revenue. If you see that your tax money is being used properly, your road is being fixed, your street lights are working, it motivates you to pay taxes. But where they don't function, then that is a problem. Then the last one is I think you spoke about planning for food and jobs. ISSER with IFPRI has done some work on planting for food and jobs. Phase 1, we have done an evaluation, so that report is there for one to see. My last point has to do with our fiscal responsibility. Yes, we have the laws, but the political economy issue comes to play again. When we have an appointing authority that appoints so many people, the governor is appointed, all the key positions, Professor Fosu spoke about procurement. Who is going to appoint people to that place, that procurement unit? So you see, when you have all of this happening, it becomes difficult for such people to have an independent mind to say no when they have to say no. We found in that of Bank of Ghana recently, let's ask ourselves, if salaries have to be paid and there's no money in government kitty, what should the governor do? Say that he's not going to pay? So these are real political economic challenges that we have to face. Rather than playing the political game, blaming Bank of Ghana, blaming this, we have to confront these issues head-on. Otherwise, we'll be back to another debt exchange program. On that note, I thank all of you for coming. I think our moderator has done an excellent job. Let's appreciate her. So I'm not doing the vote of thanks anyway, but I also have to thank the panelists as well as our online participants. Theo Champon and Dr. Sam Mensah have done excellent jobs, and we think we'll keep the dialogue going. The need for a coalition to drive this forward is very important, and we will have to work on that. Thank you very much.
Thank you very much, Professor Korte, for signing me off. On that note, I'll call Mrs. Vicentia Korte to give us the vote of thanks. Please, another round of applause for the panelists.
Ladies and gentlemen, thank you so much. I stand before you with a very grateful heart. I believe the event has been a great success, and I think we all deserve a round of applause for ourselves, please. First of all, I'd like to thank our distinguished,
Please pardon me, this is Prof signed me off before I finished my job. So on the sheet, the program you have, there's a QR code on the right side. Kindly scan it and give us one word of your experience this mid-morning and afternoon with regards to everything we've done. Kindly scan it. We'll show the results right away. And then V will go ahead with the vote of thanks. Thank you.
Thank you, Doc. I'd like to thank our distinguished panelists for their invaluable insights and instructive presentations. And I believe that we all have a deeper understanding of the challenges and opportunities facing our nation. I also want to thank all of you, our attendees, the media, for gracing the occasion and for participating so actively in the discussions. A special note of thanks goes to the organizing committee of this event, Professor Isaac Osakoto, the head of the Economics Division, which championed this event. I'd like to thank Dr. Nanama Asantepoku, the coordinator of the event. I'd like to thank Dr. Richmond Ata Ankoma, who is also a member, and my good self. And of course, the dedicated team of ISSER for the planning and meticulous execution of this event. We are grateful. I also want to extend thanks to our donors, ADB Bank Ghana and the Stanbic Bank Ghana, for their general support, without which the consistency and the level of quality of these stakeholder engagements would have been a challenge for ISSER. So ADB Stanbic, we are very, very grateful. I also want to finally thank ISSER for these events, which I believe are very important in deepening our understanding of the social and economic issues in Ghana. So thank ISSER, I thank all of you, and we look forward to seeing you at our next public engagement event. Thank you all. Please, we have arranged refreshments for each and every one of you. As you exit, please pass by the table set up at the entrance where you registered for something to take along with you. Thank you. Please, I left out a key member of the committee. Others forgive me. So another key member of the committee is Ms. Ades Otu. She's the project director of the Risk Find Research Initiative, and she was key in bringing together most of the panelists that featured today. Ades, thank you so much. Thank you, everyone.
Please, we'll be taking group photographs. The panelists and senior members of ISSER, please exit through here. The stairs at my left-hand side. Let's converge there and take some group photos. Thank you.
That is easy to remember.